We have this new base. It's a brand new bull, and we got a long way to run. I mean, I think my prediction of $5,000 gold that I made back then is going to be well exceeded. I mean, we can obviously get there before the end of this year, but I think we're going to get a lot higher. But the point I'm making is now that real gold is performing, gold is beating Bitcoin, and gold stocks are beating it even more, even with today's sell-off. And now, of course, you've also got silver. So, and I think silver, which is beating gold year to date, obviously is beating Bitcoin by even more than gold.
Peter Schiff, a well-known economist and advocate for hard assets, sees this moment as the dawn of a brand new gold bull market, one with incredible potential. After years of market distraction and speculative frenzy, gold is finally stepping back into its rightful place as the ultimate measure of real value. He explains that this rally isn't just another temporary spike, it's a fundamental shift. His long-standing prediction of $5,000 gold, once seen as bold, might now be conservative. The momentum could push gold well beyond that mark, possibly even before the year ends. What's remarkable, he notes, is how gold is outperforming Bitcoin, the once favored digital gold. The numbers tell the story. Gold is gaining strength, and gold stocks are outperforming even further, showing investor faith returning to real, tangible value. Silver is joining the charge, outperforming both gold and Bitcoin year to date, a classic sign of a maturing bull market in precious metals. The setup suggests that this is more than a price rally, and it's a reawakening of trust in physical assets. Real value is shining again. Gold and silver are leading the way. Stay informed, stay grounded in real assets, and don't forget to like and subscribe for more insights.
Very strong, yet more negativity about gold, trying to scare people out of gold, get people to get rid of their gold or not to buy gold who might have been thinking about it. But today was the topper because this morning, gold and silver got hammered dollar-wise like I've never seen. So gold at one point was down close to $300 on the lows. I mean, not quite. I mean, maybe down 280-ish, something like that. We got, well, maybe no, 260 might have been about the low. We got just below 4,100 on gold, and we settled at about 4,125. Now, despite this 6%, 6.5% decline in the price of gold, gold was still above 4,000. The price that gold closed today would have been a record and was a record when it got to this price last week. So all we did is crash to the record highs from earlier last week. But I think this is going to do enough damage to the psyche of some potential buyers that they're going to be scared out of this market when it rises to 5,000 and higher. I mean, that's what this type of decline does. Now, with silver, it was even more dramatic. Silver was down about $4 on the low today, closed down about 370, back below 50 at 48.70-ish. So silver wasn't able to hold 50, but gold held 4,000 like a champ. And I really think that when it comes to gold, 4,000 is the new 3,000 because gold's got real serious money buying it. And I think there's enough money to keep gold above 4,000. That doesn't mean it can't trade briefly below it like it did after it topped 3,000. You had, times where gold got a little bit below 3,000, but it was a great buying opportunity. I think the same thing will be the case with gold. If it gets below 4,000, you want to buy it, but you don't want to wait for 4,000. 4,125 is close enough, right? If 4,000 is really the new floor for gold, if you buy it 4,100, 4,200, you're getting a pretty good price. Silver, given the fact that you have more retail investors, speculators involved, is far more volatile. So it couldn't really hold 50, but I think 50 is no longer the resistance that can't be surpassed. It was a massive double top. The market has already shown it can get above 50. We got to almost 55 in silver. And now we've had a huge shakeout and we're barely back below 50. So I think this pullback is a great pullback. If you thought you missed the silver run, and you might have when it was above 50 and off to the races, buy it now. Immediately after you listen to this, Schiff Gold market wrap. Go get some silver if you haven't already done so. Take advantage of the sell-off. Take advantage of the sell-off in gold too. If you need more gold, I think 4,000 again is around the floor. We're going much, much higher from here. And, bull markets don't end. A lot of people are now singing, the funeral for the gold bull market. Hey, it's over, right? Gold is dead. Long live Bitcoin, whatever. It's over. Bull markets that have been going on for as long as the gold bull market has. The mainstream, Wall Street, they probably had to, bring out the big guns to really try to scare people away from the gold market because they saw that gold was getting a lot of media attention, that the public was finally maybe waking up. Bigger investors were now talking about it. And so they needed to scare people away. Oh, look, gold is too volatile. It's not, you don't want to invest in it. It's just a wild commodity. It's got no real value. Who knows it's going to happen. And so I think, from our perspective, because we want to keep on buying gold. I mean, I'm not anywhere near wanting to sell my gold. And so to me, I love any kind of pullback because it enables more customers to get in at better prices. And, it enables me. I mean, I actually bought another mining stock. I bought into I picked one that was down that I had a smaller position and I used today to add to it. Hey, this is a great, the stock I bought was down more than 20% from its peak. So already technically in a bear market. And I figured, hey, let me buy some. And, if these stocks come down more, I'll buy more. I do believe that the biggest threat to Bitcoin is gold. And I think gold's resurgence is really the pin that's going to prick the Bitcoin bubble. Because I think what really got Bitcoin going was gold's 12-year consolidation. Because Bitcoin came on the scene in 2011, really, 2012. I mean, although on my scene, I didn't buy it, but that's when people started buying it. It didn't really make the media. They took notice in 2017 when we had the big run, up to 1,000, right? But it first came on the scene in libertarian circles, hard money circles, back in 2010, 2011-ish. And that's when gold peaked out at 1,900. And then gold really did not go anywhere until last year. Yes, in 2020, it made a marginal new high. It got above 2,000, but even that was not that much above 1,900 from 2011. And then it sold off. Gold didn't really get above 2,000 until Q1 of 2024. So you had about 13 years where gold didn't go anywhere. And a lot of people who own gold during those 13 years got very frustrated because they had expected it to go up, especially with QE1, QE2, QE3, Operation Twist, all this stuff. A lot of people expected a higher gold price, including me. I remember I was forecasting $5,000 gold back then, and we didn't get there. We topped out at 1,900, and so people were frustrated. And then they looked over at Bitcoin, and Bitcoin came on the scene, and it was marketed as digital gold, Gold 2.0, a better version of gold. And lo and behold, it kept going up. And of course, initially, a lot of the true gold guys who understood gold laughed off Bitcoin. That's crazy. That's nonsense. I'm not going to buy that. But of course, a lot of people didn't know it was nonsense, and they bought it.
Despite heavy negativity and fear tactics flooding financial media, gold remains remarkably strong. Even after a dramatic $250 to $280 drop in a single session, the metal still closed above $4,000, a level that only recently marked an all-time high. This kind of sharp pullback, while unsettling to some, often signals the strength of a true bull market. Each correction, as Peter Schiff notes, is designed to shake out weak hands and discourage new buyers just before the next surge higher. Silver followed suit, briefly slipping below $50 after touching near $55, but that volatility is typical of a market waking up. What matters most is that both gold and silver are holding key psychological levels, $4,000 and $50, showing strong underlying demand from long-term investors. This isn't the end of the gold bull market, it's confirmation of its power. In Schiff's view, these dips are golden opportunities, not red flags. Every scare, every sell-off, only strengthens the case for hard assets as faith in paper money fades. Real wealth doesn't fear pullbacks, it embraces them. Because bull markets don't end in panic, they're built through it. Let's get into the interview.
The world agreed to go on the dollar standard because we made a commitment to honor dollars with real gold. In fact, the gold were the dollars. The Federal Reserve notes were IOUs for dollars that were, weights of gold. Well, we reneged on that commitment, but the world didn't renege on the deal. The world was like, okay, even though the dollar is not backed by gold, which was the basis upon which we agreed to this whole system, we're going to continue to have the gold as the reserve currency, despite the fact that it's now fiat, right? That was a mistake. The world never should have done that. They should have rejected fiat dollars and gone back on their own gold standard. But they played along, and that's what enabled this massive bubble to be built up. That's why we've had this huge, gigantic, bubble economy with trade deficits and budget deficits, and everything is a function of our ability to print the reserve currency instead of having to mine it, right? We just created it out of thin air, cost us nothing, and we could suck up resources and capital from the rest of the world that are basically been patsies. They've been, carrying our water. They've been bearing the burden and allowing Americans to live beyond our means, and so they are content to live beneath their means to make it possible. Well, this is a revolution. This is liberation. And I said this when Donald Trump announced Liberation Day. I said that he was liberating the rest of the world from the burden of propping up the U.S. economy and subsidizing the indulgent U.S. consumer. And so that's what's happening now. The world is going to go back to the gold standard. That's what they're preparing for. That's why central banks are de-dollarizing. That's why they're buying gold, so they have something other than dollars to back up their own currencies. They're going to back up their currencies with real money instead of backing it up with our fiat. And this is a game changer for the global monetary system, for the world order, especially for Americans whose life standards are going to be completely upended by the rug being pulled out from under us. So this is all happening. That's why we're seeing this big move in gold. And this is not the end of something. It is the beginning of something. This is not 1979, 1980. It's 1971, 1972. The move is just getting started. And that's one of the reasons that everybody, all the powers that be, want to downplay what's happening in gold. They want to laugh it off. They want to dismiss it as a speculative frenzy. They don't want to deal with the reality of the warning that gold is sounding. And they're hoping that they can call attention to the declines to discourage people from buying it. Bitcoin always follows gold. Gold goes up first, and then Bitcoin follows and surpasses it. So that's why you need to sell your gold now and buy Bitcoin, because the big Bitcoin rally is coming next. Except they promised the Bitcoin rally earlier. Bitcoin was already supposed to be a lot higher than $110,000, right? And the fact that Bitcoin hasn't been rallying with gold isn't proof that it's about to rally. It more likely casts doubt on the fact that it may ever rally, because if it was going to rally, I would say it should have already done so. With everything it's have going for it, from the Trump administration support to the Bitcoin treasury companies buying like crazy, the ETFs buying, the fact that Bitcoin isn't already much higher is a significant warning that something is wrong. Somebody has been selling Bitcoin, and it ain't you, right? There's an old saying, if you're at a poker table and you don't know who the sucker is, it's you, right? Well, if you own Bitcoin, right, and you're not selling, you're the sucker. You've been suckered into hodling by the people who are selling. A lot of smart money has been selling into all the hype that they created, and they're still hyping it up because they still have more Bitcoin to sell. And they want to convince everybody else not to sell, right? So they don't have competition. And of course, they want more people to buy, so they have some people to sell to. Meanwhile, what's happening in gold is really unprecedented. Not just this volatility, but the fact that gold is up year to date more than it's ever been since the 1970s. And again, this is not a coincidence that gold has never been this strong since the 1970s, because the 1970s, that was the last major monetary reset. And I believe now we're going through another one. In the 1970s, it was the U.S. going off the gold standard. That was a game changer. Now we have another game changer. We have the world going off the dollar standard, and they're going back to the gold standard. The world was on the gold standard before Bretton Woods, and even though they went on the dollar standard, they never left the gold standard, because the dollar was the gold standard. It was as good as gold because it was backed by gold and redeemable in gold on demand.
For decades, the world trusted the US dollar as the backbone of the global economy. Not because it was paper, but because it was once backed by real gold. That trust continued even after the US broke its promise, turning dollars into mere IOUs without substance. The world played along, building an economic system on faith rather than value. But that faith is fading. Today, central banks across the globe are quietly de-dollarizing, stacking gold, real money, as the foundation for a new era. This isn't about speculation or trends. It's about power shifting back to tangible value. The return to gold isn't a fantasy. It's a signal that the global financial order is changing before our eyes. As nations prepare for a post-dollar world, Americans will feel the shift most. The luxury of endless credit and imported prosperity is nearing its end. But for those who understand this transformation, gold represents not fear, but freedom. This isn't the end of something old, it's the rebirth of something real. A revolution in money, trust, and value is underway. What do you think? Is the world truly returning to gold? Stay informed, stay grounded in real assets, and don't forget to like, subscribe, and share your thoughts below.